when giving question capital reduction, it depends on the structure of the question. If the question says prepare capital reduction account and journals or ledgers, then you go specific. So this one specifically, you have to open capital reduction account and all the ledgers that accompanies it. Are you with me? With the question
Yes, sir.
specific, that's how you go about it. So, and some question can also say capital reduction account and cash or what bank account. Right. So here their interest will be what capital reduction and bank account that you open. Are you with me? However, if you open the ledgers, it will help your cause. Then you open other ledgers in addition to what the cash or bank account. If the question is not specific, but the question is general, draft a scheme for what? Liquidation and
Yes,
what?
sir.
And advice. So here the question is very open. So it depends on you. What do you do? First, you construct your liquidation account. You do either capital reduction and loss.
Yes.
Then you construct your what? Capital reduction or what? Maximum loss strategy. Use a maximum loss structure to what? To answer the question. You understand? So whichever way, whether you use ledgers and capital reduction account or minimum maximum loss structure, the outcome is the what? Is the same. You understand?
Yes, sir.
Okay, so that's why I'm taking you through both of them. This question is called Bukum Limited. Bukum Limited was incorporated some years ago to carry on business as a manufacturer of what fruit juice. COVID-19 and poor management have plunged the company to losses, which is potentially eroding the capital of the company. The statement of financial position is as of 22nd, 31st December 2022, and the financial position is as follows. And now we have additional information. We have what? Revaluation of these assets. The following asset values were what? Relevant in liquidation. So the following asset values were relevant in liquidation. What this mean is what? What does it mean?
It means we need to use them when we are working on liquidation.
Now, 2. Bukom Limited Bank holds a fixed charge on property, plant, and equipment as security for the overdraft. I don't need to explain this to you. The ordinary shareholders have decided to inject additional capital of 50 million equity shares issued at what? 2.5. In addition, part of 15% long-term loan was what to be converted into what 10 million equity shares issued at 2.5 million. The present share dividend and debenture interest are 3 years in arrears and are to be converted to ordinary shares of 2.5 each. If the capital reconstruction scheme is accepted, the debenture is secured by floating charge over the asset of Bukum Limited, other than freehold property. 50 million of the trade and other payables of 140 million were preferential creditors. Liquidation expenses are estimated at 10 million. Liquidation values for the asset are considered relevant in the event of any of capital reconstruction scheme. Prepare statement of what financial position of the implementation of what capital reconstruction scheme. Here, their interest is what prepare financial after the implementation of what capital reconstruction scheme. What they mean is this: you have to choose whether to liquidate or what reorganize. When you are done, then you prepare what financial statement. Okay, so that is it about the question. Have you seen that there are some adjustments to be done with the uh, equities? Have you seen that? All of them, we are going to use the maximum loss structure to do all this. Are you with me? Okay, so since there's what there is liquidation expenses part of the question, it means you have to what prepare liquidation. Have you seen the nature of question? This question is
Yeah.
very general, and also you have to read and then understand the elements there are in, and you should know what you should do. Okay, the name of the company. So here we have Bukum. Now we have to first
Statement.
no, we have to first construct the what liquidation scheme.
Okay.
Don't get lost to this. Don't first go open the statement of profit and loss account. You can do that. As I educated the other time, you can do that. You can open all of them and put them down. When you are done there, you go and then be constructing all the schemes. Are you with me? But with me, let us start here. So we have what liquidation scheme. Please, Bukum Limited. So first you start with what liquidation scheme. Since the question demands that. Since the question demands that you open the what liquidation scheme. But there are some questions they will not demand you to what do the liquidation straight away. Go and then what do the capital reconstruction. You open all the what ledgers, then you open the what capital reduction what account. So that is the nature of that. So in most cases, listen very carefully here. In most cases, when the question demands you to do capital reduction account and open cash or bank account and other ledgers, they will not emphasize so much on what on liquidation scheme as well. You understand? Rarely they can ask you to what to do liquidation and compare the losses and make a decision, right? Okay. But mostly when the question wants you to do liquidation, they will not load the question for you to do the reconstruction, reduction, capital reduction. They will limit for you to do maybe use a maximum loss structure to, determine whether you should reorganize or you should liquidate. So here, when we are coming to, so here we start with what liquidation scheme. So when you start with liquidation scheme, what is expected of you? What do you do first? You will start with what? With your proceeds. Were we giving proceeds? Were we giving money in the question? You can unmute and speak.
I didn't see money.
Right? What did you see in the question?
I can see assets and liability, like we have been told. A asset that is net non-current asset and current asset. I can sum them up. Then I'll get my proceeds as sales. Actual proceeds has not been given to me in the
So where
question.
where will you pick those?
We pick them from the balance sheet.
This is very serious statement that you made here.
Liquidation. So I'm coming. Note 1. Liquidation of that the liquidation asset values. Okay, the values has been given to us here. 30, 176,
So that is
32,
where because I've already told you that
yeah, 320,
I've already told you what you should do when you are doing liquidation. If they don't give it to you in additional information, you rely on what information in the statement of financial position. But if
yes,
they are
yes,
giving to you in the additional information, they will give you the evaluated what or revalued
value.
amount. You understand? So when you look at this question, they've already given it to you, and they are what they are already revalued. So one is what?
PPE.
Okay, so property, plant, and what equipment. Okay,
Yes,
and the amount is how much?
30,000, say.
30,000. Okay, and the second one is what?
Inventory.
Inventory. In the question, in the statement, right?
Yes,
Inventory.
sir.
Okay, that's fine. And inventory,
176,000.
176,000. And what again?
Trade and other receivables.
Trade and what? Receivables. How much?
320,000.
320,000.
Trademark, sir.
Trademark. What again? How much?
120,000.
120,000. Good. And what again?
Finish, sir.
Thank you. Then you sum them up. So these are
Yes,
your proceeds that you get.
so 30,000, 6,000 plus 32,000 plus 1, 2, 6, 4, 6,000.
Are you sure?
Yes, sir.
Oh, check again.
30,000
No, no,
plus.
no, no. Don't waste your time here. What you've seen over what you've seen in our additional information are what revalued amount, right? Now let's all go into the non-current asset. Not all the assets were valued. Those that are
Yeah.
valued are what will come here. Those that are not valued, you understand?
They will take cognizance.
We'll take them from our balance sheet or sort of financial position.
Thank you. Thank you. Thank you.
So when
Thank
we
you.
look at it, which ones are not revalued, then we pick them there.
We have EP, you have trade investment.
Thank you very much. Investment. It's not valued, so we pick the value. So how much is that one?
Investment is 24,000.
Thank you very much.
Next one, we have goodwill.
Goodwill. What did I say
We are
about?
not
What did
we
I
are
say?
not going to deal with goodwill because it's going
Absolutely.
to
Goodwill is
we are going to
impaired.
liquidate,
Thank you
so
very
we
much.
don't need it.
Thank you very much. That one is impaired. Now let's go to current assets. Which
Current
one?
like current assets.
Mhm.
We have inventory, we have cash and cash equivalent.
So that will come right. Okay.
Uh-huh.
Cash and what? Cash equivalent.
Cash equivalent.
All right. So that one is how much?
Cash and cash equivalent is 130,000.
130,000. Good. That's all. And you sum them up.
800,000, say.
Thank you very much. 800,000. So this is the total price. Please, have you understood? Have you understood all this?
Yes, yes, yes,
Good.
yes,
Good.
yes, yes, yes.
So you see, the
Eight and
question they keep on. The reason why is what you should know this one more. See how they turn the question around. You understand?
yeah,
Good.
it brought some here, somewhere
You
up there.
understand. So if you are not careful, you will limit yourself in the only ones in the what in additional information. Okay, so let's move on with what the
But say,
distribution.
assuming in the additional information, the
Mhm.
value itself
Yeah.
is given to is 7,000 instead of 8,000, 7,000.
No, you will still pick the one in the additional information. Ignore whatever, whether
Thank
the
you.
additional information
Thank
is less or bigger than the one in the table
thank
of
you.
financial position.
Thank you,
Understand?
sir. Thank you, sir.
Good. So let's do the distribution. Okay, so who?
secured
Thank you very
creditor
much. So let's
or
go there.
secured fixed charge.
Secured creditor. For the purpose of education, that's why I write these things. If I'm the one writing, I'll just go straight away and pick the item or maybe the account from the balance sheet straight away. You understand? So let's go. Which account is what is fixed?
From the additional information,
Information. Mhm.
note 2,
Good.
bank security.
Mhm.
Bukom Limited Bank hold a fixed charge on PPE
Mhm.
as security for the overdraft.
You understand? So here,
Yes,
so here, which one is what is tied? PP is tied to what? The bank
overdraft.
overdraft. You understand? So the bank overdraft
Yes.
is how much?
Bank overdraft from the statement. Bank overdraft. Bank over is 18,000.
1,000. Do you understand?
Yes, sir.
Please, do you understand? So
Yes, sir.
that is the fix. So it means they have to sell the what? The PPE to defray the what? The bank
Bank overdraft.
overdraft. You understand? So here, watch here. When you look also at what? The PPE, total PPE sales is how much? 30,000.
30,000.
Out of 44,000, they sold it at what? 30,000. You understand? So clearly, the PPE can what? Can pay off the bank overdraft of 18,000. Are you with me?
Yes, sir.
I believe you understand it.
Yes, sir.
Now, let me ask you a question. Assuming the
Okay.
bank overdraft is 18,000, but when they sold the PPE is 12,000, what will happen? Assuming, what will you do?
Then that difference
Mhm.
will go to unsecured
Well,
down there.
my brother, you are learning. Kakra kakra ebefa. So I'm just impressed with this answer. So assuming the PPE
Yes.
was what you it was 12,000 and the overdraft is 18,000. You see you have your assuming you have your PPE like this. Your PPE is 12 and then the
Mhm.
overdraft fix is 18. Clearly the PPE as sold cannot cater for all
Pay
the
off
overdraft. So the left, which is 4,000, will be sent to what? Unsecured what?
secure.
Defray. And the different will be sent to unsecured. So that is correct. Okay, so let's move. In this instance, this PPE is what more than what the liability. So all of them
Ability
what will be written.
will be there.
Yeah. So here, which is what bank overdraft, which is overdraft. Okay. So the overdraft is how much? 18,000. Good. So let's move. What next?
Liquidation
Thank you
expense.
very much. Liquidation expense. How much is liquidation expenses?
Let me go through
Let's go to
and see.
go and see it together.
I can see with my eye.
Liquidation expenses go to point 6. It is there.
6, yes. 10 million.
10 million. So we will write 10,000. We hang 3 zeros up there. Let me go and hang it. Okay, hang them. Okay, so let's go. The next one is
Uh,
what?
the next one, we are to pick that of preferential creditors if
Preferential
we have
preferential credit.
creditors, if we
And I
have
told
it.
the preferential creditor consists of which people?
Preferential
Salary,
creditors,
wages,
yes. Taxes,
pensions, and
taxes.
all that. So, do we have some in there?
Number 5.
Number 5, 50 million of trade and other payables of one were preferential creditors. You said they are what? What? Trade creditors, right?
Yes.
Okay. That's how much?
They say 50 million of trade and other payables of 140 million
Okay.
were preferential.
Okay. So out of 140 million, 50 million is preferential. That's all. Do you understand?
Creditors.
Mhm.
Yes, sir.
Okay. Let's move. So clearly they owe some of the what staff for their wages and their salaries and so on and so forth.
90
All
million.
right.
About 90 million.
Okay. So
The
50,000,
next one,
50,000 is the value.
yes.
Okay, let's go. The next one is who?
The next one, we take secure creditor,
Secured creditors.
floating, floating.
Okay. So secure creditors, who and who do we have under secure creditors? So let's
Let me
go.
see if
So
you
they
have
are the float, as you are saying, float. Float.
secure creditors.
So let's go into the question. Go to the statement of financial position. You may find it there.
Okay,
If they are not there, go into the footnote.
okay. We don't have anything up there. Okay,
Come to point 4,
and
the
four.
last sentence.
Okay. The debenture is secured by floating charge over the assets of Bukum Limited,
Okay,
other than the freehold property.
good. So the floating is what? Is tied to what? Debentures.
The
And the debentures is how much?
debenture from the question is a loan.
Okay. How
So
much?
let's debenture. I'm coming. Say
No, it's in the question.
debenture 300.
12% debenture.
Oh,
So
debenture.
it said we should pay these people, which is for 300,000. And I told you that when you get to the secured creditors, then you sum them up. You understand?
Thank you.
Good.
Thank you. Thank you.
Do that.
378.
378. Okay.
Yes, sir.
So we pay 378,000, right? Like this, right?
Yes, sir.
Okay. So we are paying off this. So when we deduct this one from 800,000, we've paid it out of the 800,000 proceed we have. The rest, how much?
422,000.
Okay. 422,000. Good. So we have this money left. Now let's go on. Which people next?
Yeah, so when we've gotten to that place,
The
the
next
next thing,
person is
the next we need to do is to look for unsecured.
unsecured people. Okay, so the unsecured. Now, the unsecured creditors, we have who and who.
We have suppliers and
Good.
others.
So
That
we go
is
into the short-term liabilities. Are you with me?
okay.
Go to the short-term liabilities. So you pick trade and other payables. Are you with me?
Okay.
That's where you go and pick the rest of them. What you are saying?
Unsecured. Yeah.
You go and pick them.
Supply.
Trade credit. So you go. They are
The
who?
current.
So current liabilities. First one is what?
Yeah. Trade and other payables.
So you have what? Trade and what?
Other payables.
And other payable. Now here, how much is it?
280.
Good. Watch here. I'll show you something. 280,000. Remember, remember that out of it is where we have the preferential creditors. You remember that?
Yes. Let's go to 4. I think 4. Okay, 5. 5. 5. 50 million of the trade and other payables of
So
140
50
million
million
were,
of trade and other payables of 1 million
yes,
were preferential
Sure.
Right? So this 15 million of trade and other payables of one referred to were preferential creditors. Okay, so we took this 15 million from what? Trade and other payables. Is that not the case?
Yes, sir.
And then listen very carefully here. The total preferential payment, the total is what, 140 million. That 150 million of trade and other payables of one were preferential what? Creditors.
Creditors.
So it means out of 150 million, 50 million is preferential creditors. Do you understand? 140 million, 50 million is what preferential creditors. Do you understand? And this value is what taken from what? It's taken from what? Trade and what? Other payables.
Other
And then what is the total value for trade and other payables?
180.
No, go into
280.
the question.
80. 280.
280 million in all total. Trade and other
Yes.
payable is 280,000. And we've
Yes.
already taken 50 million from it.
Out of it. Okay.
So whatever is left is for trade and other payables. So what is the amount?
230,000. 230.
230,000. Good. Then what again? Check. Under the trade payables, what again? What is there again?
I don't think we have much.
There's nothing there again. Okay, if there's nothing there under trade,
We've dealt with bank.
because it's tied. Bank overdraft is tied to something.
Yeah.
Now come to non-current. Now we are looking for liabilities which are not tied to anything. Are you with me?
Okay.
Debenture, 12% debenture is tied, is a fixed creditors. Overdraft is also what? Floating creditors. Do you understand? So
Yes,
now
sir.
what is left is we are looking for unsecured loan. It means loans or creditors that are not tied to anything. Do you understand? So come to
Yes,
the
sir.
non-current as you realize that 15% long term it is not tied to anything. It's not
Anything.
secure. You understand? So you bring that one too.
Okay.
So you have what?
Thank you.
15% what? Long term
Long.
What is how much? 100 and what?
40,000.
40,000. That's all. So we are done. So you can add this one.
230,000 plus 370,000.
370,000. Then you less it.
52,000.
So you have 52,000 surplus. So that means now you have 52,000 surplus. Then which people will now, the next persons are who? Whatever is left
With
are
them here,
four.
go to the shareholders.
As shareholders. So here you come here, shareholders. Now with shareholders, which people do you start with first?
Preferential will take it straight
Thank you
before
very much.
ordinary share.
Thank you very much. So here you start with preference shareholders. Do you understand?
Yes, sir.
So when you start with preference shareholder, do we owe them any dividend? Check. If you have reserve, you see this money left is for what? This money left is for what? For the shareholders. So first check if there is any dividend unpaid. Then you pay the dividend first. Is there any dividend unpaid?
I'm going through the note. Yes. Preferential share dividend.
4.4. Now it says what? Preference dividend and debenture are 3 years in arrears. So if they are 3 years in arrears, then they are supposed to be converted into what? Into ordinary shares. So here we are not doing what we are doing is liquidation. We are not doing what? Reorganization yet. So let us concentrate on what? Liquidation. Do you understand? Okay, so when we are coming to do reorganization, then we will consider the other issue in there. All we matters is what? The preference share dividend are not paid. Interest are 3 years in arrears. Do you understand?
Yes, sir.
So here you pay what? Preference dividend. They've not paid preference dividend for how many years?
3 years.
Now check the preference dividend. The percentage is how much? Check there. Go to the equity.
15%, sir.
15%. Okay. So we pick so the value is how much?
The value is 18, but it is 2 cities per that. Are we not going to convert it or we take it in the
Oh, no.
face?
Whatever you see over there is actual value.
Okay,
The moment you multiply or you do anything to it, it's mean you are changing it to shares. What you see here is
good,
values, right?
good.
You go do
Thank you.
anything, divide, you are changing to shares. You are not doing share. So yeah, it is 18,000. So you multiply 15,000 times 18,000. And they said they are owing them for how many years? 3
3
years.
years.
You understand? So do the math. What do you have?
8,100.
You will get 8,100. So you have 15% times 18,000 times 3. And you say you had 8,100.
8,100.
Good. Then, before then, you will think about what? The 15% what? Preference shares. So, how much is the preference shares? Is that preference shares how much?
The preference shares.
Value of
That
preference shares?
is, well, 18,000. Is that not
18,000.
what we? Yes.
That's all. You add it, then we pay them off. Let us pay these people off.
26,100.
26,100. You pay it off. So when you less, what do you have?
25,900.
25,900. So this is
Yeah.
what? So this is for the ordinary shareholders. That's what. You understand? So 1,900. It is that simple. So here, this one is for what? Ordinary shareholders. So after that, then you write report on that. That's all. So here, all you have to come and do next is what? Losses under liquidation. So losses under liquidation. What is the loss? So the only person who lost is what? Is the ordinary shareholder. So here you pick what? Ordinary shareholder. Then you pick what? Shares. Share capital. And you pick loss. That's all. Ordinary shareholder. What is their total shares?
The shares we had for them,
That's how much. Let's go into the balance sheet. Is there
8,
102,000?
102,000.
And then how much are they getting out of 102,000?
They are 2,500.
25,900. When you less it, what will be their loss?
76,100.
76,100. Ladders, right? Okay.
Yes,
So here, in terms of percentages, what is going to be? So in terms of percentages, that is going to be their loss is going to be 76,100 divided by 102,000 times 100.
74.6%.
Thank you very much. 74.6%. So here you can now comfortably write your report. You can say that all creditors and preference shareholders were able to recoup 100% of their money, or maybe investment,
Yes, sir.
dividend in arrears over 3 years has been paid. Ordinary shareholders were able to recover 25% of the what? So that is all. After liquidate, this is what you write.
We are moving into passing level. So let's go.
You understand? So that is it. So that is what you write when you are done with what? When you are done with. Let us move to reorganization. So first one's liquidation. Now we are coming to do reorganization scheme. So here we will do what? Coming to do
Maximum.
maximum loss. So in minimum loss, what do we have? I say we have what you're carrying amount here. You have your
Fair
what?
value.
You're good. You have your fair value here, and we have your what? Your gain or your loss here. Okay, good. You have it. And I say when you have it like this, your focus will be where?
Yes, the first point of call, if
Mhm.
you are doing maximum loss,
Mhm.
you must make sure you pick all the assets
Thank you. So let us start with the asset. What and what? First one is what?
in the balance sheet first.
Mhm.
You look for the fair values given in the
Okay, so
footnote.
let's start. First item is
You,
what?
you have property, plant, and equipment.
PPE. So you pick your PPE. I was saying this PPE, they didn't segregate it. So you go according to. Do you understand? So what is
Yes,
the current amount of PPE in the balance sheet of
before
financial report? 44,000. Now let's go to valuation. Let's come there. How much is the PPE under the valuation?
the fair value of PPE given to me is 30.
Good. 30,000. So what is the gain or loss?
It's a loss.
So how much?
14.
14,000. Okay. The next item is what?
The next item from the balance sheet.
From the balance sheet. It is
Yeah.
what?
We have trademark,
Trademark. Okay. So the trademark, what is the current amount?
90,000. Sir.
Okay. And then fair value is how much?
So let me go there and find the fair value for you. Trademark fair value giving me 176. No, trademark 120.
120. So gain or loss?
It will be a gain.
Okay, how much?
This is 10, so 30.
30,000. No. Then the next one.
So I'm coming up.
Right.
The next one, let's go to the. We got the next one. Investment, sir.
Investment. Okay. So investment is how much?
Investment is 24,000.
Okay. And then the fair value is how much?
Investment fair value. Statement investment. We don't have investment in the liquidation of asset value.
Okay.
So same value will move. So it will be nil. We don't have it. It has not been given.
Okay.
Uh-huh.
So if investment does not have it's not fairly valued, what does it mean?
Then it means we can't maintain the current amount at the fair value end.
If the investment is not fairly valued and the question is silent about it, then that means it will what? It will be off
So it will be nil. Okay.
or it will be nil.
Thank you.
You understand? Because they couldn't give us the
The
value
fair
of the fair value. It doesn't have fair value. You
Okay.
understand? And they didn't tell us that the investment is a loss investment. You
Okay.
understand? So if so, then we cannot what find whether there's a gain or loss or not on investments. Okay, so the next item is what?
Yes, we have goodwill.
Goodwill. Good. So goodwill. What happened to
96.
goodwill? So here, so goodwill is it negative or positive?
You were saying that uh, goodwill should be negative. No matter.
Negative. Okay, so it's
Yes.
how much?
96.
96,000. So please, the investment that I didn't, we are looking for loss or gain of these assets. They didn't give us fair value of that investment. Do you understand? So it
Yes, sir.
does, and remember, it is an asset. It doesn't mean that it doesn't have value. Just that they didn't give us fair value. They couldn't quantify the fair value of that asset for us. So it will not come here. But when we are preparing the statement of financial position, it will be there. Remember.
Sure.
You understand?
Yeah.
Just here we want gain or loss on the asset, but they didn't give a favor. The reason why I refuse to bring it here. Are you with me? Okay,
Yes, sir.
good. The next one is what?
We go to inventory.
Inventory. All right. So the inventory, the original value for inventory is how much?
216,000.
Okay, 2,000,
216,000. 200.
216,000. Did they give us valuation of inventory?
Yes, I think so.
Let's see.
176.
Okay, confirmed. 176,000. Okay, so 176,000. Okay, so what is the gain or
216
loss?
minus 176. 40, sir.
40,000 loss. Okay, so
Course,
the
yes.
next one is what?
So I'm coming. The next one is, let me go there and see. To my eye. We have receivables.
Receivables. Okay, so the receivable. So receivable is how much? Original.
38,000.
38,000. Okay, so what happened?
388,000.
Okay, 88,000.
Yes, sir.
So is there any fair value of this asset? Let's check.
Receive trade and other receivable. We
Okay,
have 320,000.
320,000. Okay, gain or loss.
It will be a loss.
Okay, so give me the
68.
68,000. Okay, the next one.
The next one, cash.
No, cash will not
We don't
come here.
we don't deal with cash.
We are doing computer. Cash doesn't. It's not coming.
Yeah, we don't. So we are done with it.
Yes. So when you are done, go to now. You move to equity. You remember. You remember when I
Yes.
talked to you about equity with regards to selected items there?
Okay.
What kind of?
Income. We have retained and
All right. So you go to equity. You have
no.
what?
We have retained and but first on it is revaluation reserve.
Absolutely. Revaluation reserve is how much?
140,000, sir.
Good. Revaluation reserve. It is positive figure, right?
Yes, sir.
So revaluation reserve. So that one is positive figure. So it's a positive figure. 140,000.
140,000.
Right? Okay. Then what are you?
We have retained
Good.
earnings.
Retained earnings. The last time I told you that if they don't bring retained earnings, they will bring what?
You get capital surplus.
Income surplus. Okay.
Income surplus.
Yes. All right. So let's go. The retained earnings. The retained earnings, I told you how it is
Negative 10.
treated. Thank you very much. So that's 10,000. It is there, right? Retained
Yes, sir.
earnings 10,000. Okay. So what again?
Reorganization expenses, we have to include that one.
Do we have it in there?
I'm going to check from the footnotes,
Good.
sir.
Let's see if we have reorganization expenses. Because I remember that they gave you liquidation expenses. They didn't add reorganization expenses.
Yes, sir.
So we move on from there. They didn't give us liquidation, reorganization expenses. What
Oh,
again?
we have dividends
Thank you
that
very
we
much. We didn't pay. Thank you very much. So preference dividend.
dividend.
So that one it was what 15% of what 18,000
Times 3 years.
times 3 years, and you said it is what 8,100. I remember.
800 years.
Yes. So that's all. You add it. That gives us our what our loss. So the answer is how much?
100.
So it was 100. All right. So negative. So this is 6,100 negative. Okay. So when you are done with it, so the next thing you will do is you will do what?
Yeah,
Sharing
share the
what
loss.
of losses. Okay.
Loss liquidation. Now we share the
And I
losses.
told you what to do here. Sharing of losses. It depends. If you are sharing losses,
Ordinary share,
ordinary
preferential share.
shares.
And I can give the values at my own choice.
No, yes, you can give the value at your own choice, but please be careful here. Are you with me? So here, you start with what? Original share value, share capital. Then you come here, your what? Your losses. Then you do your what? Your new liability, right? This what I taught you yesterday. Okay, so you had it something like this. Is that not the case?
Yes, sir.
Good. And I'm saying that whenever you are doing this one, put it at the back of your mind that you are comparing this one to who? Liquidation losses.
Okay.
You understand? You put at the back of your mind of what? Liquidation losses. When you look at the liquidation losses, how many people lost and how many people did not lose? You understand?
Yes, sir.
So who lost?
Preferential share was paid.
Yes,
So it
in
was
all.
ordinary share.
So only ordinary shareholders lost under liquidation. So when you are coming to do the sharing here, so you are going to deal with only what? Ordinary shareholders. You understand?
Yes, sir.
You are going to deal with only ordinary shareholders. You can't deal with anybody because the rest they didn't lose. So when we bring them here, the preference share, when we bring any other stakeholder here, the person will prefer to liquidate because if under liquidation, I'm not going to lose anything, and you are coming to do reorganization and I'm losing, then I'll prefer us to liquidate. You understand
Sure.
the idea?
Uh,
So for
yeah,
that
that is
reason, when you are coming to do the reorganization, you take note of all that. So in this instance, only shareholders lost. So they are the person you will bring them here. You understand? So what is the total shares of ordinary shareholders?
the total shares of ordinary shareholders. Let's go
It's
there.
102,000.
Yes,
So 102,000. And then how much are they losing? Watch here. So all the loss, maximum loss here will be attributed to them because they are not going to share with anybody.
35,900.
Good. So their new share value was 35,900. You understand?
Yes, sir.
So in
Mm-hmm.
percentage wise, how is it going to look like? You understand? Okay. All right. So the losses when you less the original share capital and the losses that the shareholder will bear, they will get 35,900, right? Now, this is how much is left with their share capital. Now, if you want to know the percentage of loss, that will give you how much? You will pick 66,000 of loss divided by the total share. That gives you 64.8%.
8%.
Good. So when you are done, then this is how you present it. So you have your liquidation, and you have your reorganization. All right. So when they reorganize, what will be a loss? So here it's only about ordinary shareholders because they are the ones who lost, right?
Most.
Ordinary shareholders. So in terms of what value, they are when you come to liquidation. Let's go to liquidation. Let's go to liquidation. Liquidation. In terms of value, how much are they losing? In terms of value, how much are they losing? In terms of value, they are losing 76,100. Have you seen it?
Yes, sir.
Okay. So 76,100. 76,100. Representing how much?
Percentage.
Yes. We
That
calculate
gives 4.
we calculated it there. Have you seen it?
Yes,
74 point.
6%.
When you come to reorganization, how much are they losing? They are losing 66,100. In percentage wise, what? 64.8%, as you calculated above, right? Okay,
Yes, sir.
good. So after having done this, what do you say? Then you come and tell them that all the what? All the losses on the reorganization should be what? Should be borne by what? By the ordinary shareholders, as we did above. What? Who will what? Who will lose how much? 65% to bracket approximate against what? Against 75% under what? Under liquidation. Under liquidation, which is what? Favorable to reorganize than to what? To liquidate. Full stop. That's all. We are done. Any question up to this point?
No, sir.
Good. So let us go and crown the whole conversation with what? With statement of what? Financial position. Okay. So you come here. What's the name of the company?
Bukum Limited.
Okum Limited. So statement of what? Financial position as at, check the year for me. When is the ending accounting year of this company?
31st December 2022.
That's fine. That's at 31st December 2022. You underline beautiful. Then you start with your non-current asset. All right. Your non-current assets. Let's go. What and what are under your non-current assets? First one is what?
First one, we have PPE.
PPE. What is the new fair value of PPE? Check, 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 check.
On my notes, that is 30,000.
30,000. PPE now 30,000. Which asset follows?
Trade
Trademark.
mark.
Please, when you are doing it, use the
Mark.
use the statement of financial position in that order. You understand?
Okay.
So the next one is what?
Trademark.
Thank you very much. Trademark. Now, trademark, check if trademark is valued.
There
Then
is
use the
value
valued
20.
amount. Trademark is
120, sir.
120,000. What next? Use the
Investment.
good. So use the uh balance sheet. So investment. Investment is how much?
24,000.
24,000.
We don't have any value, but
That's it. No, 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 no.
for
It's
fair
not. It's not fairly valued. So you maintain the value in the balance sheet, please.
value. And it's goodwill, but we are not going to
Goodwill
talk
is
about it.
goodwill is impaired. That's all.
So
So
we move. We are done.
yeah, we are done. Then let's go to current asset.
Yes.
Uh, current asset. What can you say? First item is what?
Inventory.
Okay. So inventory, is it fairly valued? Check the is it fairly valued?
Yes, inventory is fairly valued.
How much?
176,000.
176,000. What next? Receivables, I guess.
Trade receivables.
How much is it fairly valued?
Yes.
Let's check.
320,000.
Okay. So 320,000.
Then we have cash equivalent.
Cash and what? Cash
Cash equivalent.
equivalents. Okay.
From the financial statement is 130.
Good. It's what? 113.
130,000.
Okay. Leave that one open. Leave that
Okay.
one open. I'll show you why. So then let's come to equity
And liability.
and liability. Now, we have what? Your equity. Now, let's go to share capital. Leave share capital also alone. I'll show you why. Now, let's go to the next one.
The next one is revaluation reserve.
No, go to 15% preferentials.
Okay. 15% irredeemable preference shares.
Okay, how much is that?
It's giving me 18,000.
Okay, that one, I guess that they didn't say anything about it. The reason why I leave those there is because there something was said about them. We work out. Preference share was not nothing was said about preference shares. Okay, we are reorganizing. You know why we are bringing, because once we are reorganizing, and with preference share did not lose any money. You understand? So
Sure.
for that reason, they will bring their full amount will be brought. Now let's go to
Non-current.
non-current liability. Okay.
12%,
Come again.
12% debenture,
Good. How much?
300,000.
Over 300,000. Okay. And what again?
Long term, 15%.
Okay. 15% loan.
Long term,
Okay. How much?
140,000.
140,000.
Yes, sir.
Okay. So leave that one to something.
Open.
Something was also said about that. We will deal with
Yes.
that one also.
Then we come to current liability.
I'm coming. Current liability. Okay. How much? It's what is payable, right?
We have, yes, trade payable.
That one too is how much?
280,000.
Good. All right. No wahala. Okay. Leave that one to open. We will deal with that. Okay. So now let's come here. Come and do something we call workings here.
Okay.
Workings here. Now, this workings, we will start with what? Equity. Right? We will start with equity. Under the equity, what do we have? We have ordinary shareholders, right?
Yes, sir.
Or let me say equity capital. Let's start with let them sit that way. Or share capital. What is the share capital of the company?
The share capital of the company is
102,000. I'm asking the
no.
share capital. What's the share?
We
What's
made
the
some losses. We made some losses.
okay? So what is our share capital?
The share was one. We made losses of 100.
Okay. Okay. So our share capital. So you want to tell me that our share capital now our new share capital is what?
100.
Yeah, this one. Our new share capital is how much?
100.
Hey, losses. That one is
Not
losses.
no 35.
So if anything, this is our share capital, right?
Yeah,
New share is
35.
35,900, right? Okay.
Yes, sir.
35,900, right? Okay.
Yes.
So that's our new capital. Now, follow me. Come to the item 3. What did they say?
Item 3.
Mhm.
Ordinary share capital injection. The ordinary shareholders have decided to inject additional capital of 50 million equity share issued at 2 cedis 50 pesos.
Are you with me?
100%, sir.
Good. So, new capital introduced, right?
Yes, sir.
It's how much?
50 million, so
So,
50,000.
okay, 50,000. At which price?
2 cedis 50 pesos.
2 CD, 50 pesos. Multiply, what do you have?
125,000.
125,000. Now, watch
Yes.
here. There should be a corresponding entry to this. You understand? So you have to open your what? Cash or what? Bank. The moment you bring in money, You understand? Or you
Okay.
don't understand?
Yes.
When you bring in capital, you debit cash, then you credit what? Equity. Can't you see that? Okay.
Yes.
Then you bring your what? Your balance brought down of cash, which is cash and cash equivalent. Those that you see over there. How much is that?
Cash and cash equivalent is 130,000.
130. The reason why I said that, if you can recall, this is what I did here. When you look at it, you see cash and cash. You say as you should leave it open. You remember?
Yes.
Okay. Then you bring the cash and cash equivalent here, balance brought down, and they said they brought what new what capital. So you debit card, then you credit capital. So new what capital introduced, which is how much when you did the
50,
calculation. How much?
50. I'm coming, I said.
No, we did the calculation here. Can't you see that?
125.
Uh,
125.
125,000. Simple. And what again? Now, let's go into the question. Now, read, continue reading.
Okay. In addition, part of the 15% long-term loan
Mm.
was to be converted into 10 million equity shares issued at 2.5.
So here, have you seen what they are doing here? What they are doing here is, in addition, part of 15% long-term loan has been converted, you understand, into
Yes,
10 million equity shares at once. So here, you again go to equity.
equity.
Yes. So here, 15% loan converted. You understand? So how much are they converting it? They say what? 10 million, which is what? 10,000. At which price?
10,000, 2.5.
2.5. They multiply by 2.5. What do you get?
25,000.
25,000. Now, this is not cash. It is what? It is account, like it is account change of what values. And so here you have 15% loan. Here, account, the ledgers, account ladders. So it's a credit balance, right? Balance brought down. How much is the what total uh, loan? 15% loan is how much?
25.
No. What is the balance of what 15% loan? 15% long-term loan. Can't you see it here? In the section of financial position.
Oh, yo, let me. I thought what you have calculated.
No, no, no.
Let me go to the financial 15% long term loan. 140.
140. So I'm just showing you. So 140, 140.
Thank you.
And they are saying that, watch it, and they are saying that they are converting 15% loan out of 140. They are converting how much? 10 million equity share of that at the price of what? 2 CD 50 pesos. You understand? So it means part of 140, they want to what? They want to become equity shareholders. You understand? So they are taking 10 million of 140 million to become equity shareholders. Do you understand?
Yes, sir.
So when we calculated, what did we get? We get 25,000, right?
Yes, sir.
So that brings us, uh, uh, if we are doing the capital reduction, you would have seen here capital reduction, right? Which is how much? I'm saying capital reduction, sorry. It is change between two accounts, which is what? 15% long-term loan and what? And then equity shares, right? So you see what? Share capital here, because the money is going to what? Is going to share capital, which is what? 25,000 here. Then you will come to what? Your share capital account. So see that our balance brought down for what? Our share capital was how much? 35,900, right? And
Yeah.
now some people want to become equity shareholders. Who are they? 15% loan, which is what? 25,000. You understand?
Yes, boy.
So so you realize that at the end of the day, you have your new balance of what 15 new balance carried down. You understand? So when I was doing the ledgers, I taught you all this, right?
Sure.
So the balance will be how much? I think 115,000.
Yes, sir.
You understand? So 15% loan, that is the arrangement. And you say they want to become shareholder. So this is how the transaction will be. It is not actual that came. It's just that they want to become shareholders and it will reduce their their percentage liability in our books. Do you understand?
Mhm.
So that is it about this one, right? So that when you come here, very good. When you come 15% loan, you realize that the loan was what 140,000. And they said that out of that, 25,000 should go where? Should become shareholders. When you less it, what do you have? You understand? We have already calculated it using the journal. So what do you have? You do it. What do you have?
Yeah. 140 minus 25,000. 115,000.
115,000. You see, so that is what I did here. Have you seen that? This is the same thing that I've done here. Do you understand?
Oh, okay.
No, do you understand?
Yes, sir.
The way you are surprised after showing you this one is what I'm even baffled because I
Uh,
explained it here.
yes. I've seen it, sir.
So these people they wanted to become ordinary shareholders. That's why they converted part of their money to become ordinary shareholders. You understand? So it will increase the what? It will
The,
increase their equity. It will increase
the
equity. You understand?
value.
Value. You understand? So here the same thing applies here. Have you seen that this one new capital introduced? Have you seen it? So the same
Yeah.
thing applies here. You realize that I have already credited I've already debited cash. So you see, I'll bring cash here. So cash is how much? 125,000 here. This money. This calculation that we did here. New people introduce money here.
Money.
You understand? So you credit share capital, then you debit what? Cash. You understand? As you can
Okay.
see here. You understand? Okay.
Yes, sir.
Good. Then let us go to the next item. Continue reading. What did they say again?
Okay. Let me go to a footnote. Uh-huh.
Go to point 4.
The debenture is secured on. Okay, we've dealt with that one. Point four. Preference dividends and debenture interest arrears. The preference share dividends and debenture interest are 3 years in arrears and are to be converted into ordinary shares of 2.5 each if capital reduction reconstruction scheme is accepted.
You understand? So here, all that they are saying is that if they decide to what? If they decide to um convert, if they decide to convert their if they decide to what reconstruct their dividend that the company owes to them, right? They will convert it to what? To shares. Please are you with me?
Yes, sir.
They will convert it to shares. So how do you go about it?
There is an amount given, 2.5. So they'll convert everything against the price.
Are to be converted shares of what 2.5 each if the her construction. So yeah, are to be converted. So each to 2.5. So how are you going to do it, please?
Let's check the preferential dividend value.
No,
Yeah.
what you should also know. No, you multiply by 2.5% if you want to
2.5.
convert, because
The 50%
yes,
long
yes,
is 10.
when we look at new additional cash introduced, they gave you 50 million equity shares, and they said at 50 pesos, 250 pesos, you multiply, that gave you the total value.
Yes.
Then when you come to 15% long term, the same thing. They gave you in
10 million.
shares, 10 million equity
We
shares
have
at a
25.
price of
25.
250 pesos. Now, when you come to preference share dividend and then debenture interest, which are what? Are to be converted to ordinary shares of what? 2 CD, 50
25.
pesos each. Remember, they are already in values. They are not in shares.
So we have to convert them into shares before we come and
No, why
multiply.
should you do that?
Uh,
Why should you do that? They are already in values. They are not in shares. So why should you go and convert it again?
yes, I'm getting you,
They
sir.
are
Now,
already in values. Assuming they gave us to us in shares, we would have converted them into what? Into shares. Or we have converted them into values.
but now they are in
They
values.
are already in values. So why are we
So
going
there's
to
no need
convert
of conversion.
at all?
We take it on the face.
That's it. On the face value as they are.
Thank you.
You understand? So
Thank
later, if you want to convert them, listen, later, if you want to convert them into shares, they're giving you their unit share price, which is how much? 2
you.
CD 50. So you can, when you divide it, then that will give you that will give you what? Unit
Number of,
shares of those. Are you with me?
yes, sir.
Good. So let us go into it. So the first one is what? Preference shares. Preference was dividend. Since we are reorganizing, they gave us that we can what? We can convert them into what? Into ordinary shareholders. Is that not the case?
Yes,
Uh-huh.
sir.
So we also agreed that we are reorganized, so it will take effect. So it's 15% of what? Multiplied by the ordinary preference share, which is preference share is how much? 18,000, right?
8,000.
Multiplied by 3 years. What do we have?
I think we did this too.
Yes, we did it, and we had 8,100.
Fine. Yes.
You understand? So you have seen that it is between account, right? Okay. So here you will see that this one is what? Preference dividend. I will increase what? The 18,100 here. Okay. Now let us look at the other one. The other one is what? Debenture interest. That one too. What is the debenture interest? Check. Go
Debenture
into the
interest.
the debenture interest.
The
Go.
debenture,
It's 12%, right?
yes.
Okay. So debenture is what? 12% multiplied by how much? Total debenture is how much? 300,000, right?
Yes.
Multiply, they say that one too is what? 3 years, right?
Yes.
Okay. Let's go. What do you have?
300,000 times 12. 108,000.
108,000. Are you with me?
Yes, sir.
So I think that is all about this. So the debenture interest. Okay, 108,000. Like that. So when you are done, then you close the account. That's all. So the same thing here. I'm doing both the T and then
The statement
the
for.
straight line method gave for you. Now watch here. Are you with me?
Yes, sir.
Good. I want you to also look at something here. Go into your balance sheet. What do you have? Have you seen that we have bank overdraft?
But yes,
How much is bank overdraft?
bank overdraft is 18,000.
Good. So if you have bank overdraft and there's money coming into the account of the company, remove it. Right? Pay off 18,000 so that your account, if you don't pay off and it still maintain it, still your account will balance. Do you understand? If you
Okay.
remove it, your account will still balance. Do you understand? Aha. So since we are reorganizing, remove and you have cash, pay off those debts. They are there because you don't have money. That is why you went for overdraft. But if there is money coming in, then you should pay off your overdraft. Is that not the case?
That is the case.
Pay off. You have overdraft sitting there. There's money coming in, right? You are reorganizing, and there's new money has come in. What do? You pay off the overdraft sitting in your books. Otherwise, it will accumulate interest. So the rest, do the math. What do you have?
130,000 plus 1 2. So let me see the 125 plus 18,000.
Minus 18,000.
Okay. Minus 237.
237,000. So this your cash and cash equivalent. So you go there. What is it? Cash and cash equivalent is what?
7.
237,000. Right? Okay. Which one didn't we we were mentioning the this and items here, you didn't even bring payables here. Clearly you understand that the payables should go.
Yes.
Clearly you want it because current liability, you didn't bring a bank overdraft here. When we are mentioning them,
No, you should leave.
you didn't bring bank overdraft here. Somebody can maintain it and your
Okay.
account will still balance. So you understand? But me, I see that once you are reorganizing, money is coming. So you can pay off all those liabilities off. Do you understand? Okay. Somebody can decide to maintain the overdraft 18,000 here. You understand? So if you are maintaining it, then your cash here will what? You will not remove 18,000. Are you with me? Okay.
Yes.
So
We'll add it.
yes. You don't add it, it will not come at all. Why should you add it?
Okay.
Why should you add overdraft to your cash?
Oh,
Please,
no, you can't.
boss.
Because you are owing. You are owing. You can't add.
Yes. So please add the equity also, and let's see.
Okay. Please, the equity values
Mm-hmm.
302,000.
302 what? Okay, so we go to our equity, then we put 302,000. Now, there is one thing that I want to share with you here. We are left with payables. How much is the payable?
Payables. Let me go there. 280,000.
28, like this, right? Now, the reason why I come here, we know payable to be 280,000. Now, what I want to avert your mind to is what? Have you seen the interest that we calculated here?
Where?
Okay, let me bring your mind here. When you have watch here, when you have preference dividend, preference shares, maybe 12% preference shares, maybe 10,000. When company, so every year, how much interest dividend do you pay? Times what? Times 10,000. How much interest dividend do you pay?
Pardon?
Calculate this. What do you get here?
12% times 1,000.
10,000. How much?
Yeah, I'm coming. 1,200.
1,200. So every year, this is your dividend that you receive every year,
Oh, okay.
right? Every year you receive 1,300. if the company is consistently making loss, they can pay you what, 1,200, right? So you realize that you have year one dividend. Dividend 1,200. Year two dividend 1,200. Year three dividend 1,200, right? When you add all of them, what do you get? Year 0063. This is what we call accumulated what? Accumulated what? Dividend.
Dividend.
Right? So it will be there. When the company starts making profit, they will pay. Right? Good. Now, the same thing applies to, assuming you have 12% debenture. Maybe 12%, the debenture is also 12,000. Right? Now, if you want to know, so this 12% debenture, this one comes in the form of, so here, sorry, this one is, assuming this one is just like this one, which is 10,000, right? Good. So this debenture, every year you pay 12% of what? Of the 10,000, which gives you how much? 1,200. This one we call it what? Interest. Do you understand?
Yes.
Now, if assuming year one interest, year two interest, year three interest are not paid, 1,200, 1,200, 1,200, they accumulate, which is what? 3,600, right? When they accumulate, where do we place them? We place them in where? Payables. Do you understand?
Yes,
We
sir.
place them in what? In payables. So it will be accumulated. So here, when we look at this, what we've done here, they said that they are converting all their debenture interest to become ordinary shareholders. Please, do you understand?
Sure.
Good.
I'm looking.
So if they are converting all of them to become ordinary shareholders, what they are converting all the outstanding debenture interest to be paid to become ordinary shareholder. What happens? And you know that you have your payables. So that's how the account will look like. You have your payables. Payables has what? Credit balance. So assuming you have all your interest of 3,000 sitting here, right? Then you have your what? Your share capital here. And the share capital, they said that okay, they've converted all these 3,600 to become ordinary shareholders. So what do? You credit what? You credit share capital by 3,600. Well, they want to become ordinary shareholder. Then you debit your payable so that you remove it from what? From the books in the payables. Do you understand now?
Sir, you take it again, please.
Okay.
So that I can assimilate
Listen
it.
very carefully here. I started here. I use preferred dividend here as a beginner. I said that preferred dividend, watch it. Obviously, this is your preferred dividend. If the company doesn't pay year one, dividend will be accumulated over the years, and we call it accumulated dividend. Do you understand? And it will sit in the books of the company so that they will pay it later. But in our system of financial, we didn't see any accumulated dividend in the what? in their statement of financial position. Possibly they have it in their notes. Do you understand? That they have outstanding dividend to pay. Are you with me?
Yes, bro. I'm with you, sir.
They have dividend to pay. Good. Now, when you come to the same thing applies to debentures. Debentures are also what? Interest payable to what? To the holders. You understand? And in the
Yes,
they
sir.
said that for 3 good years, they didn't pay the debenture holder. So they have 3 accumulated interest to pay. And I
Okay.
demonstrated here to you that when they don't pay dividend, example like year 1, they didn't pay interest. Year 2, they didn't pay interest. Year 3, they didn't pay interest. It will be accumulated and wait. Do you understand? Now,
Yes.
when they are accumulated, they become payables in the book of the company. Do you
Okay.
understand? They become payables. But when they become payable, then that means the company owe the what? The debenture holder for what? For 3 years. And here is the catch. In the question, they said that all the what? Debenture interest yet to be paid, they are converting their what do you call it? They are converting their interest to become ordinary shareholders. Is that not what the question says?
Yes.
So they are converting all their what yet to be paid 3 years interest what to become ordinary shareholders. So how is the account going to pay? Calculate all the what interest, debenture interest to be paid. When you calculate it, these people wanted to what become ordinary shareholders. So how is it going to happen? You credit the share capital with that amount. Do you understand? You credit the share capital with that amount. Then you debit that same amount in your payable to remove it from the payables.
Okay.
Do you understand? And I gave you example payables. Payables has what? Credit balance here. So assuming this is your accumulated debenture interest sitting here like this. And now they said that they want to convert this one to become ordinary shareholders. So you have to remove it from your payable. How do you remove it? You debit it here. When you debit it, you see that it will be removed. Your account will balance like that. Do you understand? This interest, which is outstanding, what will go. You understand? So when it goes where? It goes to a share capital. They said they want to convert it to become ordinary shareholder. So you debit it in the payables, then you credit it in the what? In the share capital. Can't you see that? Can't you see that? Watch here. To become dividend interest under which account is it? Under which account? Under which account the debenture interest is?
Debenture interest.
We've already calculated it. Can't you see it?
That is 10,8,000.
And I'm saying, under which account is it?
It's under equity.
Good. Under equity, because they said they are converting the what? Debenture interest into what? Into equity.
Ordinary.
Do you understand? That's what they
Sure.
said, right?
Sure.
So that means once it is here, it is at the credit side of what? Equity. Can't you see that? I demonstrated it here. Well,
That's it. The T account we are
T
doing.
account, it's at the what? At the credit side of what? Of the equity account. Which means that these people, they are part of payables of the company. If so, once you credit what? Equity, you need to go and remove it you have to go and remove it in the what? In the payables.
Yes.
You understand? And this is the payables. Then you remove what? 108,000 from it. That's what I'm talking about.
Okay. Okay. Payables. Payables. Trade payables. Current liability. 28,000 minus
So when we less, what do you have?
172, sir.
172,000. Like this.
Yes.
Okay. Now you can balance your account. That's all.
Okay. 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 Then let's go up and let me see. 30,000
So
plus
add this. What do you have? Add the current assets. What do you have? Add
plus
the non-current assets. What do you have?
174,000.
Now let's go to current assets.
Current asset 176,000 plus 320,000 plus 3270 733,000
Okay. We'll add them. Add the
to
two.
174 907,000 equity
Add only equity here.
302,000 320,000
302,000. Okay. Go on.
so wait, why that 302,000 plus 18,000
What do you have?
320. Okay.
Long-term liability. What do you have? You add it. What do you have?
415,000
Okay. Done. Now add this 320,000 plus 415,000 plus 17,2,000. What do you have?
907,000
Excellent. 907,000. Good. That's all. All right. So, man. Okay, little balance. Okay, so that is all that I want you to know when it comes to these things. You will appreciate accounting if you put your mind to it, right?
sure
But you see, this thing, the cash balance issue I did here, if we choose to maintain the overdraft, right? We will only
yes,
we
sir.
will only add this one and this one. You understand? And we will get
Yes,
our amount. Then we take it to cash and cash. Then this one will also go under current liability. You understand? Your account will
yes.
self balance. All right. So all that you have to do is that you should revise all that you have been taking, you've been taught, and let's see what God have for you for this very sitting. So
Thank you.
until we meet again, Charlie,
We'll talk.
good evening.
I